Alright, let's take a look at some examples of how we can use the RSI to scout for possible entries and exits in the market. In this example, we'll look at Apple's daily chart, and each candlestick represents 1 day's worth of price action. So let's take a look at some quick examples of what oversold, overbought, and divergence on the bullish or bearish side. So I've highlighted a few quick areas of where we can see the RSI in the oversold range and in the overbought range. As you can see in this particular scenario here, we can see that the oscillator has continued to move to the downside, getting below our 30 mark and in our oversold territory. When prices and the RSI are in the oversold territory, this is a good time to enter a long position as prices are due for a bounce. This is normally called an RSI oversold bounce, and you could potentially see this play out on most time frames. Now, the contrary happens on the sell side of things. We talked about when prices and the RSI are way overextended, typically the RSI will be above 70 and considered overbought. This is a good time to exit your position or enter a short position as prices are due for a pullback. And we can see in this example, prices pulled back shortly right after the RSI broke down. Now, in these examples, we'll look at divergence, bullish and bearish. In this first example, we'll look at bearish divergence. As we can see, it's pretty clear that prices are making new higher highs, but the RSI has made new lower highs. So when we see this happen, this is called bearish divergence. As prices continue to create new higher highs, the oscillator on the RSI continues to make new lower highs, thus creating divergence. When this happens, this is again a good time to exit your positions as prices are due for a pullback, and we can see what happened shortly after the climax in divergence. Bullish divergence is exactly the opposite of bearish. So what we see is prices continue to make new lower lows and the RSI continue to make new higher lows. When we see this happen, this is called bullish divergence, and it's typically a good time to enter a long position as prices are due for a bounce. And we can see in this scenario, prices rallied quite a bit and you would have gained quite a bit as well. This is another great example of bearish divergence. We can see prices made new higher highs, but the RSI continued to make new lower highs. In this particular scenario, this would have been a great time to exit your position, as we can see what happened shortly after this particular move. I hope you enjoyed the video. If you have any questions or comments, please let us know. Thanks a lot and take care.